What's up, everyone? This is Andrew with Spark Finance here, bringing you the most important business news that recently occurred. To start off with, we have a discussion on the battle of Bitcoin, which continues to rage on. Is it a legitimate currency? Is it a pyramid scheme? Is it going to be just a fad, or is it something that is a revolutionary technology? Well, we had a big announcement that recently occurred. Bitcoin just hit around February 10th, $48,000 for a single Bitcoin. And today it was around 47,000, so it sold off a bit. But just recently in this past week, Tesla, the company that makes electric vehicles, announced they had filed with the SEC a document, and it showed that they purchased $1.5 billion in Bitcoin. And they seemed to do so in January. So this was an earlier period. And remember now, Bitcoin had been around 40,000 before that. It was around 43,200 after this major announcement. And this is a big deal. It's about 7% of the cash reserves of Tesla that are being put into this Bitcoin currency. The company will also accept Bitcoin for payment on their vehicles. And the reason they said they are doing this is that it would have more flexibility to further diversify and maximize returns on our cash that is not required to maintain adequate operating liquidity. So this is a far cry from a year or two ago when they were thinking about they might not have enough cash and might go bankrupt. On top of this, of course, you have the CEO Elon Musk making tweets. He put out a Chuck Norris meme saying Chuck Norris can withdraw Bitcoins from Mt. Gox, which was a big exchange that I think was back in like 2013 or 2014 that got hacked, and then they locked all the Bitcoins up there, and he says, "This is power," on his comment to that meme. So he knows what's going on. He's done some research into the background on Bitcoin, and he's really been promoting it lately. And he's also been promoting Dogecoin, if you heard that. So it's kind of interesting because didn't he get investigated for kind of making claims like this, and the SEC went after him about what he was saying about Tesla stock? Now I guess he's doing it in the cryptocurrency space. So just think, if other companies in the United States start doing this, like a lot of companies, if they're taking cash reserves and putting it into Bitcoin instead of US dollars, I mean, this is one of the dream scenarios for a lot of the people that are really into this belief that Bitcoin is going to take over as the world currency. And I mean, this would kind of show that, right? It seems like when individuals or buyers were coming into the marketplace here, it kind of petered out around 40,000 on the price of Bitcoin, and it's sold off a bit since then. But now when you have these big announcements of these companies going into it, that means every month these companies could potentially be adding millions and millions of dollars into Bitcoin. And now, like, there's a bunch of companies that decide to do this. Tesla's one of the ones that had the major announcement just recently, and also because the CEO is the richest guy in the world, it gets a lot of attention, right? But some of the main ones were MicroStrategy, Square, Galaxy Digital, Hut 8 Mining, Voyager Digital, and then finally Tesla. In all, there's about 18 companies that are taking some of their cash balances and putting it into Bitcoin. 16 of those companies are actually in North America. So this is interesting to see that actually in North America, we're kind of on the cusp of financial innovation here. A lot of times in the past, it started happening in other areas with all of the crazy rules we have around it now. Then you have Bank of New York Mellon announced that they're letting their users hold and transfer and take out Bitcoin from the bank. So this is the oldest bank in the United States, and they're now accepting Bitcoin. Bitcoin volume on a daily basis now is around $22 billion. Like, this is really big. And if you look at it, you have what was the company? Coinbase. You have the Coinbase IPO that's coming out pretty soon. You have all this news about companies going into Bitcoin. You have people getting Dogecoin, altcoins, all this other stuff. And Coinbase is the largest, basically, exchange for Bitcoin in the US right now. So imagine when they have their IPO and all the buzz that happens around that. We're going to see where Bitcoin can really go. It seems like if we didn't have this sell-off like we usually do at 80% on Bitcoin, if they can last the whole year without a sell-off, maybe it's at the point where it's not going to have these huge volatility where it sells off and then has to come back again. But still, the price is near the all-time high. Then the CBO came out with a report on the $15 minimum wage. They said it would cost about 1.4 million jobs over the 4 or 5 years where they were going to be enacting it. And at the same time, it would be giving like millions of people a wage raise. But I think a big part of this too is that they're not factoring the inflation that's going to cause, hamburgers and everything at restaurants to go up in price. So maybe you're getting a $15 minimum wage, but that hamburger at a fancy restaurant that costs $17 now costs $23. So that wage might not be as much as people think it would be. Then you have the CBO also came out with some numbers on the national deficit, and they said it would reach $2.3 trillion in 2021. And remember, we had it was like $3 trillion last year, and now we're having a deficit again of over trillions of dollars here. So this is the second largest deficit since World War II. Of course, the worst one before this was the one last year. So this is not a good trend that we're on right now. The debt to GDP ratio is actually at 102% of GDP. So we are now basically like Japan, where our entire economy would have to work for a year to pay off the debt. And remember, Japan had decades of lost growth after they had the whole situation where they bail out their banks and they really went crazy with the debt. By 2031, they're expecting the GDP to debt ratio to go to 107%. This doesn't include any other trillion-dollar packages that are passed or any stimulus deals or anything like that. So this is something we have to watch here and see if every year now we're just going to start running trillion-dollar deficits and what that does with interest rates, debt, and corporate bonds and everything just in general in the economy. Then Take-Two came out with their earnings, and they came in at $1.54 a share, which was way above estimates. It was about 24% above where it was expected they were going to come in. Apparently, there's still a lot of demand for their Grand Theft Auto game. People love driving in there and running stuff over. That game's like 8 years old. They also had big demand for their NBA 2K title, so there's a lot of interest in the company. But even with the great results, they haven't really increased their expectations going forward, and that's what we care about as a stock, not where it's been, but where is it going. So since they didn't announce any new details about the next Grand Theft Auto, which is the top-selling video game franchise of all time, I believe, the stock ended up selling off a bit for the week, and it was down from about $215 to $199.86. So once again, they actually had good results, and yet their expectations weren't high enough to drive the stock price up further. Then we have another video game event from Electronic Arts, which is acquiring Glu Mobile in a $2.1 billion deal. So if you're wondering what Glu Mobile is, this is basically a company that makes mobile games on your phone. It's very kind of a different type of games than on consoles. They made that Kim Kardashian game that was really popular back in 2014. They also have a number of different sports titles. And why this is interesting is because we're seeing Electronic Arts getting into this mobile business because their competitor, Activision Blizzard, with, I think it was King Digital with their Candy Crush, they were doing really well. Meanwhile, EA actually had the revenue coming from their in-production mobile games was down like 10% last year in 2020. In 2019, I think it was down 13%. So they're really trying to get kind of a foothold in this mobile gaming market. Next up, you have Canopy Growth Partners, one of the marijuana stocks here. So they posted smaller loss for the fiscal third quarter, but they had record sales. The company said it expected to achieve profitability during the second half of 2022, which starts for them actually on April 1st. Now, there's been an interesting bit of news around the marijuana stocks in general these past few weeks because the Reddit Wall Street bet traders have moved on over from GameStop to other stocks that were heavily shorted like AMC and Ross Stores. Then they went to Dogecoin, they went to over-the-counter stock, and now they went into marijuana stocks because every day it's got to be something different, right? So you had like Tilray, Kronos Group, Aurora Cannabis, all those companies, they shot up. Tilray was up 58% at one point in a single day, and then after that, another day, it was down 40%. All of these stocks shot up and then they sold off in a very short period here. I mean, being down 40% in one day is pretty crazy. And this is making people think, maybe this market is still getting a little bit too frothy, like 1999, like the dot-com bubble, right? Because a lot of people are going into these companies that don't have good financials, and they're just kind of trying to make a quick buck. And it's kind of like 1999 when you had people going into these dot-com companies. And it was the same concept there. Who cares if they're making money right now, right? As long as they're involved with the internet, that is the way of the future. And that's going to be the next big thing. Well, a lot of these companies ended up going bankrupt. There's not many that survived to this point, and there was a giant sell-off in the marketplace at one point. So people are trying to make the comparisons to that. Around the world right now, we have a semiconductor chip shortage. So this is very important because these microprocessors are needed in all electronic goods, right? They cited the main reasons for this were there was a sharp recovery and sales of phones and cars and everyone working from home and needing, the personal equipment required for that, such as your laptops and other devices. That created a lot of demand in a very short period. Now, semiconductors, they take about 6 to 6.5 months from the time you're like, okay, I'm going to start creating the semiconductor to the end result of having the semiconductor. So you can't just ramp up production instantly. At the same time, some of the production was closed because of the pandemic closing down factories. So one of the companies affected by this would be Sony, which said they literally cannot produce enough Sony PlayStation 5s because of this shortage. This is also affecting the automotive industry. So GM just reported strong quarterly earnings, and they also gave a good outlook, even though they acknowledged this global chip shortage would be limiting their vehicle production. Did you see also GM had their Super Bowl commercial where they had Will Ferrell promoting their new electric vehicle? Like, this is something big. All of these companies going and jumping on the electric vehicle bandwagon here. And GM, Ford, Toyota, a lot of these companies are making some kind of comebacks here. Toyota actually came out and boosted their profit projection and also said it would launch 3 new electric vehicles in 2021. So this is a lot of crazy competition coming out there, right? You have GM has it was a Cadillac electric vehicle, Ford had the Mach-E, Toyota's having 3 new electric vehicles. What does this mean for those ones that people thought were innovative like NIO and Tesla and Nikola, right? Those were the stocks that people were funneling into before this. It's going to be interesting to see how that plays out. Then we have some news on the GameStop front. Fidelity, at the height of the whole situation, Fidelity Investments sold all of the positions in its stock. It was one of the most, the biggest beneficiary of GameStop going up so much. They had 9.3 million shares, or 13% of the company. And then as of January 29th, you know how many shares they had? 87 shares. So they literally dumped all their shares to all of these retail investors that were pretty much willing to buy the shares at any price. And the big thing here was that this was from 2 funds run by the Fidelity Investments, and the main owner of that was Joel Tillinghast. And he had this decision here, and it looks like they made bank on this one right here. Speaking of all that stuff with GameStop and the Wall Street bets, we also had some news from Robinhood with their Super Bowl commercial. They had the Super Bowl commercial showing everyone can invest, right? They made investing simple. You just hop on the app and you do it. Except if you want to trade one of the stocks that they put on their restricted trading list, and then you can't buy it, you can only sell it, but we don't want to talk about that, right? Thought that was kind of interesting because it kind of went against their commercial there. Some really big news, also the Bumble IPO. This is the online dating app that can be downloaded on phones. They raised $2.5 billion by selling 50 million shares at $43 a piece in their IPO. The company has 12.3 million active users right now. So it's pretty significant. Shares were up 85% at one point from the IPO price, right? So the IPO price was about $43. The opening price when the stock first trades on the secondary market was $76, but it ended the day at $70. So it's not a very good showing for the IPO compared to some of these companies last year that we talked about in the other videos, where they literally doubled on the first day of trading. It was still up about 64% from the people that could actually get in at that IPO price though. At one point, the CEO, Whitney Wolfe Herd, who is only 31 years old by the way, she had her net worth get up to $1.4 billion. So this IPO just made her a billionaire. That's pretty cool right there. And this was somebody that used to be at a competitor company and then kind of broke off and started her own company. I mean, maybe if they had waited for those stimulus checks to get to people, they could have really had their stock fly up on the first day because people could have funneled the money into it. The company's total revenue was $376 million. They had a net loss of $84.1 million in 2020. In 2019, they said they had net income of $68.6 million though. So although they had the loss last time during the pandemic, they did all right before that. An important number here as well, they had free cash flow of $4.7 million. Now, their main competitor, which the CEO actually broke away from, and there was some lawsuits involved in everything, is Match Group. And they own all those other dating apps like Match and Hinge and Tinder. And they have a market cap of about $45.5 billion. So we're going to see if Bumble can kind of meet the competitor here and see what they can do. Disney came out and they recorded a profit of 32 cents per share when estimates were actually for a loss of like 41 cents a share. So they kind of blew away the estimates here. This was big before it is their first. This is big because it was their first quarterly profit since the pandemic started. So they were really struggling for a while there. Disney Plus now has 94.9 million subscribers. They added 21 million in the last quarter. The theme parks, which are operating on limited or even no capacity at this point, actually had a 53% drop in revenue there. So they're trying to make this up on the media side now. And it is interesting also to see that their licensing deals were down 56% during the quarter. So the reality is that if you don't have these big movie releases, if you don't have, like a Frozen or a Mulan or a Marvel movie coming out, Infinity War, something like that, to push all the sales of the toys, people don't have that engagement. They're not buying the toys as much. Then we have the Clubhouse app. So we know how TikTok was one of these apps that just came out of nowhere as a social media app, and it got really big, right? Really fast. Now this new social media app is all audio, where you can drop into audio conversations with friends and new people and make more new friends. So the company is now worth $1 billion by the private funding rounds where they raised capital. And they've only been around for 1 year. So the speed at which these companies are becoming really successful, really big, and really well known is incredible. Then we have iRobot Corporation, which is not the Will Smith movie, but they actually had shares do well because they earned 46 cents per share versus estimates of 0.31. Their net income was $20 million. And this is the company that makes those little rover bots that go and wander around the house and they vacuum and they mop for you. Revenue was also up 28% to $544.8 million from $426.80 million last year. The stock for this company is up a whopping 140% in 12 months. Another great return here. Their best-selling products are the Brava and Roomba robots. The company had expanded their production now in Malaysia, and they were kind of trying to move away from China, which was causing them some issues for them on the production side, and it seems to be paying off that they did this. They're doing really well with their e-commerce portion. They have a good online presence, and they also have an app where people can make purchases from. So once again, this company did a nice quarter. Uber Technologies came out with an interesting story here. They had a narrower annual loss than expected, so they still lost money, but there's some takeaways here that are kind of big that I'd like to speak about. The company really had to change around their whole business model because of the pandemic. Nobody wanted to hop in taxi cabs and get people to drive you around when you can get the virus, right? They cut around 25% of their staff and tried to get rid of all non-core business. So this was really tough on their staff, but as a business, this might be able to make them able to survive. The company also decided to focus instead on food delivery and actually bought the food delivery service company Postmates last year in 2020 to help them with this new objective that they have. They are now being utilized for delivering food and groceries as well as medicines to people's houses. And this is a big difference from basically being a taxi service, right? So while the ride bookings got cut in half last year because of the pandemic, their delivery bookings actually doubled in the fourth quarter compared to a year earlier. The results of those actions ended up saving around $1 billion for the company in expenses in 2020. So that was pretty incredible that it was that much of a difference. And if you're looking at their adjusted EBITDA loss, it was $454 million from $615 million in the year earlier quarter. Uber is now claiming they can be profitable by the end of 2021, and we'll have to see if they can make that happen. Then we have some interesting news about money flows in the marketplace. Bank of America came out with data about the inflows of money into equities or the stock market. Turns out that $5.8 billion of inflows came into equities just last week, in 1 week. That is the largest weekly amount ever that they recorded. Very big numbers there. Apparently, from this new data, they also found that Robinhood investors accounted for 7% of the variation in stock returns in the second quarter of 2020. So we're seeing these retail traders really coming in and actually moving stocks. It was indicated that without the people from Robinhood investing, or retail investors, if you want to call it that as well, the portion of the small cap companies in the market, the upswing that they had in their share prices, it would have been 30% lower without all of this extra demand from the retail investors. So you have to keep this in mind, that retail investors now, it used to be people spoke about the market, it was always about, big hedge funds and pension funds, mutual funds. Those are the ones that controlled the market and where stocks would move, right? Now we're getting into a scenario where individual investors are actually driving the prices of stocks now, and a lot of these big institutions, they're being a lot more passive. They're trying to mimic indexes or indices, and they're trying to basically just hold these positions, whereas these traders are coming in and they're driving up the price of a stock, driving other ones down, and it's different market now than it was even 5-10 years ago, where people used to trade were the big institutions. Now the big institutions are just focused on kind of following the index and trying to match it. So they're not being as active. They're just kind of buying and holding. So these smaller guys can come in and really move the prices of stocks. And I think that's good in terms of, hey, you know what? People have a bigger say in the market now. It's not just controlled by these big institutions. So I'd like to leave it on that note. If you want to see more business news, stay tuned to the channel. I'll give updates every week. Thanks for watching Spark Finance. I'm out.